I have my human life value in term insurance, how does converting a part of it into a whole life policy work? All right. So explaining human life value again, just to make sure that we're clear. So human life value is essentially what you are worth as a human being if you were to die today. So if you got hit by a bus and died, what are you worth as a human? And so what we like to preach here at Better Wealth, that protection and risk is super important.
Can I?
Go ahead.
Sorry.
Yeah.
Human life value, yes, but it's really what they think on paper you're worth over a certain period of time, over your human life value. And so, yes, I just want to clarify that you did say that, but it's maybe because you might not have any life insurance, so you might pass away and it'd be like, okay, but it's like they look at where your current situation is and say, over your human life, this is the amount of wealth that you would accumulate.
Amazing. So at Better Wealth, we think it's super important and valuable that at the bare minimum, you get term insurance to protect your human life value, right? I mean, if you love your loved ones, your wife, your spouse, your kids, your husband, whoever that is that's important to you, being able to pass down your human life value of income is super important. And so a lot of times we start off our clients who aren't ready for an and asset to start in term. Term is super important. It's that protection tool. And even if you are ready to start an and asset, we'll start with an and asset, and then the remainder of human life value, we will, do the rest into term.
Yep.
So from the conversion standpoint, what that'll look like is, let's say your human life value was, let's just say we're going to use the example of somebody only has term insurance. So they have term insurance for $5 million. So you're paying monthly. So we'll just say that's $100 a month that you're paying into your term policy. So now we want to start an and asset because we feel like we're ready based off of our current circumstances. We've saved more. We got an increase of income. We have the appropriate cash flow, and an and asset makes sense officially. And so what we would do is we would create an illustration for the amount of contribution that you wanted to contribute. So if you said, hey, I'm ready to do $10,000 a year into a policy. So we would see how much death benefit that $10,000 a year would use. So if that $10,000 a year used $1 million of death benefit, we have $5 million of term insurance to convert. So what ends up happening is we would start your whole life policy at $10,000 a year, and that would use $1 million of death benefit. And now we have a remainder of $4 million of term insurance. So now we can make the decision on, do we keep the term insurance in place, which you highly suggest? You can stop paying the term insurance if that's an option that you want to take as well. It's all going to be based off of what you want, and you now have your and asset in place as well.
Hey, I want to thank you so much for watching this video to the end. This video is on life insurance, and if you have more questions about life insurance, infinite banking, why you should overfund it, we have a link below that goes to our and asset vault. This is a free vault that gives you everything you need to know about life insurance. We have case studies, we have a calculator on there, we have a handbook, we have frequently asked questions, we go through a process. I have my masterclass on there. We literally want to be the one-stop shop for every life insurance decision. And so if you want to learn more, click the link below, and we look forward to educating and maybe opening your mind and eyes to the power of life insurance.